Hello, welcome. So for today's video, we're going to talk about the analysis and interpretation of financial statement. So, financial statement analysis is the process of evaluating risk, performance, financial health, and future prospect of a business by subjecting a financial statement data to computational and analytical techniques with the objectives of making economic decisions. Okay, so we have the three kinds of financial statement analysis or FS analysis. First, we have horizontal analysis. Second is we have vertical analysis. And third is the financial ratio analysis. So, financial statement analysis will be the basis for investors, for the business owners, for financial manager on their economic decisions. So, as we all know that if we use numbers as the basis or as we use percentage as the basis of success, then we are more likely to agree for the risk of having a higher percentage than taking a risk of having a lower percentage. So, for example, if you're able to win a contest with 30% chance, okay, so normal people would think that they would not continue joining the contest since they only have 30% chance of winning. But others will take the risk because 30% chance is still a chance. Okay? So, but what I mean here is that if you have a numerical value or a numerical basis or a percentage basis for your decision, then it will help you make a better one. Okay? So, most of the people, or as most of the businesses, okay, uses this percentage to take the risk. And that the higher the percentage that they have, then they can say that they have a lower risk. So, first of them is the horizontal analysis. So, horizontal analysis is also called the trend analysis. This is a technique for evaluating a series of financial statement data over a period of time with the purpose of determining the increase or decrease that has taken place. So, this will reveal the behavior of the account over time. If it is decreasing, if it is increasing, or not moving at all. You can also tell the magnitude of the change and the relative change in the balances of the account over time. So, horizontal analysis uses financial statements of two or more periods that all line in the financial statement or financial statement analysis may be subjected to horizontal analysis. Next, only the simple year-on-year growth is covered for horizontal analysis. Next, the changes can be expressed in monetary value and percentage as computed by using the following formula. So to solve steps in horizontal analysis, first is to compute for the change in the amounts in the baseline year, your earlier period, and then the later period. So the formula that you will use is earlier period minus later period is equal to the difference, which is either increase nor decrease. So after computing for the difference, you're going to get the percentage by dividing the amount in the baseline year. So the difference is to be divided to the later period for the percentage. So for example, we have this one. So the earlier period minus later period will be, so 250,000 minus 175,000. And then, as you can see on the dates, yung 2014, yung earlier period, minus 2015, which is the later period. So, dito yung makita. So, si 75,000 pesos, since positive siya, it is increased. And then, for percentage change, yung 75,000 pesos divided by 175, which is the later period, ibig sabihin na mas late, makukuha mo is 42.86%. So, if you want to check it on your calculator, you may do so. So, this is evaluated as the sales increased by 75,000 pesos, and this represents the growth of 42.86% from 2014. The second type of analysis is what we call the vertical analysis. When we say vertical analysis, it is also called as the common size analysis, which is a technique that expresses each financial statement item as a percentage of a base amount. So, for the vertical analysis, you can analyze the statement of financial position and the statement of comprehensive income. So, for SFP, the base amount is always the total asset, and then you can get the percentage by getting the balance of the account divided by the total asset. So, for the common size SFP, the analyst can infer the composition of assets and the company's financing mix. So, for example, we can have the following. So, imagine that this is an SFP of a company where cash is 200,000, accounts receivable is 400,000, inventory is 250,000, total asset is 1.4 million pesos. So, by dividing the balance over the total asset, you can get the percentage of the asset. So, you divide 200,000 divided by 1.4 million pesos, you get 14.3%. For accounts receivable, you get 28.6%. For the inventory, you can get 17.9%. For equipment, you can get 39.3%, a total of 100%. But, if you will take a look at the addition here, so based on the percentage, 0.3 plus 0.6 plus 0.9 plus 0.3 is is 2.1. So, one part of this cash of this account should, uh, should be rounded down so that you can have the sum of the component a total of 100%. So you cannot exceed 100% since your base is uh, the 1.4 million pesos or the total assets. So it's up to you which component will be rounded up or which component will be rounded down, but you should take consider of the amount to be divided. For example, itong 14.3 pala is 14.38. Tapos si halimbawa lang sa 400,000 ito pala ay 28.65. So si 14.3 since mas mababa yung peso value ni cash, so siya yung ilalagay ko as 14.3. Tapos si accounts receivable yung ira-round up ko. And so on. So, ganun din pagdating sa accounts payable and liabilities and equity. Ang total ang denominator natin will be the asset. Since asset is equal to liability plus equity, same lang siya na 1.4 million yung gagamitin natin. Pero tandaan natin, based on the rule, ang gagamitin natin is based on the total asset palagi. So, accounts payable, notes payable, and owner's capital is 21.4%, 28.6%, and 50% respectively. All in all, it is 100%. So, the above value may be evaluated as the largest component of asset will be the equipment, which is 39.3%. So, cash is the smallest component at 14%. And on the other hand, 50% of assets are financed by debt and the other half is financed by equity. So, it's like describing your table when you make your thesis or your research where you're going to describe the highest percentage that you have and then the lowest percentage that you get and so on. So, now for the Statement of Comprehensive Income, SCI, we use the same formula but kung ano yung i-replace natin will be different. Ang over naman natin is total sales. So, this will reveal how the net sale is used up by the various expenses. So, kung saan-saan natin kinagamit yung nasa net sales. Net income as percentage of the sales is also known as the net profit margin. So, yung net income natin, dito din natin mabibase yung net profit margin. So, for example, we have the net sales, the 900,000, cost of goods sold, gross profit, operating expense, and net income na 300,000. So, i-divide lang din natin siya sa 400,000 divided by 900, 500,000 divided by 900, operating expense na 200 divided by 900,000, and net income na 300 divided by 900,000. But, this part, hindi siya mag-equal ng 100%. So, the meaning of the computation will be evaluated as follows. So, the cost of goods sold is 44% of the sales. Okay? So, the cost of goods sold is 44% of the sales. So, the company has a gross profit rate of 55.5%. So, the operating expense is 22% of the sales. So, therefore, the company earns an income of 0.33 for every peso of sale, which means sa bawat piso na mabebenta, ang kinikita mo doon is 33.33 cents. Okay? And the profit generated for every peso of sale is 0.55, or ito, yung percentage converted into decimal places. So, with this analysis, di ba, as investor or as manager, as finance manager, makakapag-decide ka na. So, halimbawa, ito, cost of goods sold is 44% of sale. Ibig sabihin, mas mataas ang gross profit mo kumpara sa cost of goods sold mo, which is a good indication that the business is earning, and for every peso na i-spend mo, may kinikita si company na 0.33. So, kung kumita si company ng 1 million peso a day, so, nagkakaroon ka ng 300,000 pesos. Tama ba? 300,000 pesos. So, yun yung application ng vertical analysis. So, the use of the common financial statement allows the comparison of the two companies of different sizes. This is because SFP and SCI comparative information are standardized as percentage of asset and sales respectively, which means that if you wanted to compare a small-scale business to a large-scale business, for example, pagdating sa gas station na meron tayo, pwede mo ikumpara si Shell kay Flying V, which is, alam naman natin na si Shell is the big three pagdating sa oil industries in the Philippines. Tapos si Flying V, parang sila yung mga second ranking. Pero by the virtue of percentage, equal mo silang nakikita. Na hindi porkit na sa big three si Shell, kung magiging mas mataas ang percentage ni Flying V, ang indication lang nun is that mas profitable ka mag-invest kay Flying V. So, yun yung application na pwede nating paggamitan dito sa horizontal and vertical analysis.